Hello everybody, this is Gabriel. So after having been ill lying in bed last week, so this is the first week I've actually looked in more detail at the markets. I think it was an exceptional week with very good market responsiveness. So the opportunities were more on the lower time frames as some of the more established higher time frame trends in various asset classes. We've actually seen a counter trend rally in the opposite direction. So I think I've taken five trades this week. Like four of them were winners, really nice winners, and one of that was a scratch trade, break even trade. So let's have a look now at the trades. And that's just an example of how you can put together a trading channel. So you can do it in Word or any other form, or you can do it in PowerPoint. And well, PowerPoint is more a visual version of putting things together. I think if you want to put together your trading channel in a more like condensed and quicker way, if you want to not write too much, well, PowerPoint doesn't allow you to do that. And I've just put here some comments on the quality, and that's the evaluation of my trade in each of those time frames. So that's a copper trade, a long and an S2 turtle pattern. You can nicely see here that on the 60-minute, well, overall, even the higher time frames, we're in a downtrend. But here on the 60-minute, we can see that we have started a counter trend rally. And sometimes counter trend rally can actually develop very strong moves. Typically, these are exhaustion moves. Like these moves tend to take out stop run levels. So we've already taken out, well, the 200 was such a level, or this was a level, this was a level. Now we've just taken out the third level, if you so want, but there are two more levels up there. So price is developing a very strong counter trend rally, and this translated into the high frame, the 50-minute chart being in a very strong trend. We actually have developed here an S2 turtle pattern. Well, for copper, the 1 minute chart is relatively low. We can see that the spread, the bid-ask spread, is not tight, definitely. We can see that the bars, they don't look smooth. So what we actually see is um, the we can detect here on this chart that the tick moves, the minimal, the incremental, the smallest incremental moves we can see here already because it's a 1 minute chart, and the price is not moving that much, but still, you get a very clear turtle pattern, right? So it's this one here. That's a low, that's a higher low on the left side, and it's a higher low on the right hand side. The price tries to break high, it doesn't get out of the box, it stays in, and then there's this big spike down, so that's the test bar. So as this is the test bar, well, this becomes a dominant high, so that this got never broken. So what we see here is a consolidation on the midline, basically, that is support and resistance. So it sits here on the midline, and then we get a second test bar, if you so want. So now we've got another dominant higher low, this one, and we get triggered an entry. So this extended consolidation actually was the result that here our mid frame, well, we're having very good support in the 21. Even we see a touch of 50. That's another edge. We can place the initial stop on the other side of the 50. So it's actually very well protected. So what else do we have here? So on the 5 minute, the mid frame is all sideways because the momentum move that leads to the pattern didn't make a new high. There's another new high, so that gives us an additional stop run level coming from the mid frame. So I know that this trade has a lower win rate, right? Especially that the stop is not particularly tight. So I'm actually looking to break this high, this stop run level high on the mid frame, and to see a continuation of this strong trend and a continuation of this counter trend rally, right? It sits on strong. Price sits on the high frame on strong eight support. We see a couple of bars, small bars sitting there, actually respecting very well the eight support. So we are in counter trend rally mode. Well, what are the negatives for the trade? Well, it's in counter trend rally mode. So I actually like to trade with the higher time frame trends. And it all depends, like if this works out well, that actually this counter trend rally continues, right? And this is basically it. It's a lower time frame, but we might get a higher average, R. So yeah, so this is how it developed. So I had to move one time from higher to the 5 minute actually to show what was going on. So the trade took off, took out the consolidation high. It didn't develop a lot of momentum. But then there was a pullback at this one, and then momentum came in, and this is the measured move. It's a bit short of the target, but anyway, yeah. So here, actually, on the lower time frame, I think it was the 15-second chart. So this was an S1, that was an S1 pattern that I took as well. Yeah, here's my risk. But price actually didn't move. Price stalls here at just below the 2000, the 2600 level. That's the stop run level on a higher time frame, the 2600. So price is shying here away from this important level. And as this S1 trade I took didn't give any meaningful development, like any positive development. I was actually thinking about getting out the trade, and as we've got some good touches here, well, actually I moved my stop together with this trade and this trade, so I moved it here, so this became basically break even. It's maybe getting stepped out of this is maybe an 0.15 hour loss, and yeah, so this was a nice more than 2 hour result for the original turtle pattern taken on the 1 minute chart. So now it's 8 p.m. and I'm thinking about going to bed. And I was actually closing this trade. I was closing this trade down here with a 2 hour result, which is good. Let's have look at the next one. So that's an energy, crude oil, system 1 gecko on a 15-second chart. So that's a very low time frame chart. But we can see how the high frame, the 5 minute, is in a really strong trend. So that's a super trend. But this super trend comes out of sideways. So it's a little bit not so trustworthy. This might be an exhaustion move. And it might not go long forever. So what else? Have I written here? Yeah. So price has found strong support at the moving averages. It went beyond the 21. It even touched the 50. That's a very strong support, and the trend is a very strong and smooth trend. It's basically it's a very good EMA trend if you so want. So this adds another layer of of an edge. So the pattern, well, the pattern is beautiful here. It's a very strong base, very strong, but there's no test bar, right, coming out of it. I want to see the capitulation, like the bears showing strength and then getting ripped off. So there was no test bar, and I didn't take this entry here, right? It's very a lot of traders getting motivated to get in here, right? It's very tempting to get in here. However, there's no test bar, and the test bar actually occurred after this rebreak. So that's a test bar, the red one, and as this has broken both the test bar and the base, well, that's the entry signal. So in addition, we've got another edge. The stop being down here is protected by the 200, so there's extra stop protection, which is really great. So let's see about the 240-minute chart. Well, that's going a couple of time frames higher, but actually I only found meaning in the 240-minute chart. And this is this is range bound, as we can see here. It has tested the lower range. We see a hammer bar, so a rejection bar, and now it's starting again here, a counter trend rally towards the mid level of the band and ideally towards the upper level of the band. So currently it's looking for the 200 moving average. We might see a spike through. We've seen it here and here and here, right, several times. So a spike through, taking out the stops. And this is the trade idea. Making a spike through, well, towards the 56 level, more or less, it might go. And this is a stop run, stop run on the other side of fishing for stops on the other side of the 200. That's basically the trade idea, continuing with the high frame trend and this special situation of a 200 stop run move and the spike through. Ideally, obviously, then following that, meeting the consolidation high. So what are the negatives? The high frame, well, it might be an exhaustion move. It might not go on forever here, but still, it's a super trend, and we should base our decision. It's just a small negative. Well, 240 is the range rate. It would have been better if we were on full-blown uptrend, right? And the low frame, well, it's a relatively big risk here. We basically only achieve 1.2 hour breaking this high, so that's another negative. So it's a make or break trade. It's based on this trade idea, right? To get to spike the 200 and even go higher. There are a couple of other stop run levels clustered. So this might actually go into a swing trade. So yeah, I've taken this trade in the morning at 10 a.m. 15-second chart, so there's a lot of room to go. So now I have to move to the 1-minute chart. Well, it developed beautifully. There was a big green bar, I mean, taking out all those stops, and actually, yeah, actually taking me quickly out of the risk of this trade. Obviously, that's an ideal situation. Getting a bar like that, well, that's an exhaustion if you so want. So I wouldn't expect this to go on forever. So there was some sideways up price activity, and so let's see, quickly moved into. Okay, yeah, all right. So there was no pronounced pullback, right? So these are not pronounced pullbacks. So typically I want to wait for a pullback and a new high to actually apply the 20% profit trail rule, but there was no such pullback. And the other rule is, okay, if there's no pullback and you get to a 3R level, which was around here, then you can still apply, then you should still apply the 20% profit trail. So that's what I did somewhere here, 20% profit trail. I haven't achieved the 4R level up here yet, so I was still in the trade with this deep pullback, and with a new high, then somewhere here I've actually achieved the 4R level. So with a new high, I was trailing the 2/3 profit trail. With this smooth uptrend, I was never stopped out for a long time, right? So the trend was fueled actually by the spike 200. It went through it. We don't see a big move, but still, that's a stop run move. Well, here in hindsight, my stop was here, following the 2/3 stop trail rule. Well, in hindsight, I don't think this stop out was very good, because I was giving away. It's about 2 hours. I was giving away here. Yeah, with this loose stop. Well, seeing this price activity and this dominant higher low, very dominant here, the V spike, I should actually have trailed the stop relatively tight here. Then I would have saved another, well, I would have a 1 or better result. So I should have taken some profits of this trade, especially that we can see here how the momentum of this trend is actually slowing down. It has never been a very strong trend, and it's even slowing down. So it would have been actually in hindsight a better place to put it here. So that's the negative coming out of this trade. That is a great trade. It's about a 5-point winner till like 3 p.m. and yeah, it went well beyond my original target, so it actually followed the 240-minute chart, taking out the stop. So that was a special situation trade, if you so want. So let's have a look at the next one. That's a short, very short term. No, that's a long. That's wrong here. Okay, that's a long trade, a very short term, 5 seconds, and the Nasdaq, right? Right. So the Nasdaq started some runs. Well, US equity indices are overall in uptrend, so that goes with the trend, but still, well, we have a super trend here, a very strong, it respects nicely the 8, but it's coming out of a prolonged sideways. So that there's this negative always, that this might be an exhaustion move, especially if you look at the 5-minute, the high frame. That's clearly an exhaustion move. We are heavily overextended from the moving average. We're running for stops, but still, the super trend is very strong. On the mid frame, we see strong support on the moving averages. This pattern, this S2 turtle pattern, is well embedded in the mid frame moving averages. It's well touching the 8, so it's a good pattern. The pattern as such is not of terrible good quality, right? I mean, we see the saucer shape. That's a low. That's a higher low, or it's a one dominant higher low. So I was waiting for another dominant higher low, or at least a two, like a couple of higher lows that are less dominant. So I got that here. We've got 1, 2, 3 higher lows. So that balances out this dominant higher low on the left side. So following that, well, there was a dominant high. Then that's a test bar, right? Testing angular test line. Dominant high, clear entry, clear stop, relatively tight stop. So it's not so harmonic. It's there's a clear, and another positive here is that there's a good momentum move. You can see it here too. Good momentum move that leads to the pattern. So I'm expecting a similar shape and extension, or 100% extension, but similar in size and type. Similar momentum like we've got here, so that's a positive. That's a positive. So what are the negatives? The negatives, well, overextension, high frame. Well, we've talked about that. So yeah, overall, I think the positives outweighed the negatives. The mid frame is a very strong. The high frame is a very strong trend. The stop is very tight. And well, this goes against, that's a trade-off against that this might be an exhaustion, might not go forever. But we don't need to go forever. It's a very tight stop. It doesn't need to, just needs to break to new high or test the last high to bring us, to be able to reduce the risk. So this is how it turned out. It didn't go off immediately, so we see some consolidation. We see a price comes very close actually to test the midline. And well, after this consolidation, I was wondering, well, when will I get out of the risk, or even be able to reduce the risk? So hitting 1.2R here, I was very happy. Obviously, I was able to reduce my risk, half in my risk. Then there was a bullring new high. I was applying the 25 trade, etc. And then after 4R, the 66% trade right here. So let's see what I've written here. Okay, well, momentum comes in late with this trade. It's accelerating here. Right. Okay, as I know that the high frame is already in overexhaustion move, so this is accelerating too. So that might actually be the last exhaustion move within an exhaustion move. And this now in hindsight, tells me that I should have traded my stop tighter. Like either I should have taken out some profits. I'm allowed to do that above 2R, right? Or I should have traded my stop to a dominant high low, and there is a dominant high low. So this would have saved me about 0.8R, and I should have tightened it better actually. And but still a great trade, a 3R result. So let's have a look at this one. This is the last one. The last one actually, it's an S2 on the 15-minute. So that's the all the other trades were below the 1 minute or below the 1 minute. So that's 15-minute chart. So I had stalked that and I posted that as well on the blog. I think this as an S1, but let's see. I don't remember actually. I didn't like that S1. I can't see it well for some reason now. But anyway, this transformed into an S2. Yes, we can see that's an S2 with a low, higher low, and higher low, and it never developed really nicely. So this actually became an extended version of an S2 with the angular test line. We've got a dominant high and a clear test bar here, right? We've got a wick bar and a very tight stop. So let's see. Well, that's a very special trade. It's a more complicated pattern. Good test bar, very tight stop. So that's the main edge why I took this trade. this trade. It finds well support here at the 200 moving average, so the initial stop is well below. Finds support, tests the 200 as well. We've got a very strong retracement on the mid frame, so price activity is partly already below the 21. So it finds support at the 21 and the 50. So the stop is on the other side of 50, so it's a very well protected stop. Obviously, we have got two dominant stop run levels here. As part of the pattern. There's a lot of room to go higher, right? So it's a make or break trade. Is price able to actually recover this strong and deep pullback and make a new high in line with the higher time frames? Well, then it's going to be a bigger winner. And as well here on the daily chart, that's a high frame. We're in a counter trend rally here too with natural gas. As you know, it's an overall and very strong downtrend, so it has already taken out this stop, and now we're about to take out the next stop on the level. So that's a counter trend rally that is in acceleration mode. We nicely sit on the 8 of this good it's very good of this very good trend. Yeah, so this acts as a magnet now at this level. We might even get up here on this 15-minute chart. The problem today, well, at the time of entry, that's Friday morning. So yeah, depending on how it develops, I might not hold it over the weekend, so we might not reap the full benefits of a potential swing move here. So what are the negatives? Well, it's a pronounced consolidation. It's a more complicated one. It's a deep pullback, but it's a counter trend rally here on the higher time frame, which is fine. It's a special situation. Very tight stop, so that's the main edge here to counterbalance all the other negatives that are there, right? So let's see how it developed. So we see some good up momentum. Well, another test of the 200. Well, our stop is on the other side of 250 of the mid frame. It's very well protected, so this finds support here and then shoots off, makes a new high above the consolidation high. And yeah, here it's attacking the stop run level on the higher frame, the daily. We don't see the stop run level yet. It's just testing that level, but we are in consolidation mode, and it's kind of I think it was 4 p.m. already. So the market is going to close soon, and knowing that we are here like counter trend, that we have made the move, right, the swing move higher on the high frame. We have more or less not fully achieved the target, but like more than 50, like maybe 60-70% target achievement. I'm not prepared to hold that over the weekend, especially knowing that natural gas is very volatile and can gap down. So let's see. Yeah, so there was no follow through. We're coming to the end of the week. I closed it down here, and yeah, it's a good more than 2-hour result. I was very happy with that, obviously. So that was a very good week, a special week, because we had counter trend rallies on higher time frames. It was a week of trades in lower time frames, even down to the 5-second chart. We had well, I didn't trade an S3 this week. There was an S3 that I missed. That was I think that turned out to be a break-even trade. I had 4 winners, good hours, and one break-even trade. And yeah, that was a very good week. Thank you.